Welcome traders to today's Admiral Markets video. Here we're going to take a look at technical analysis and take a look what happened with the USD weakness last week and what we can expect this week on the Eurodollar, Pound, Yen, and Aussie. First of all though, the disclaimer explaining that this material is intended for a global audience. Please take into account that this may not be suitable for everyone. To get the corresponding info on charting conditions and other details, please take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that, and this webinar is for educational purposes only. Please pause the video to read the entire disclaimer, and we do thank you for your attention. Before we head over to the chart, first of all, the lineup of webinars this week. Tonight, on Monday, weekly FX recap with Tarantula. Then Tuesday, Wednesday, Thursday, our live trading labs here with range trading, price action, support resistance, and Fibonacci trading. Then Tuesday, not Thursday, the right style for you, the Pro Learning Lab webinar. And on Wednesday, the usual expert advice, price action trading number 4. So hope to see you at one or all of these webinars. Let's start with the euro dollar. Last week, we had a continuation of this uptrend indicated by the green support line. And what happened at that point? Engulfing bullish twins. So now we're looking for potential for the break of this resistance line, which is very strong, the red line here. That could definitely be a hinder. Of course, also the psychological 140 level, definitely in play here. So if and when that line gets broken, then we could see the potential, I would say, for more upside up to the 78.6 fib. Which is basically this zone right in here. Now then there's still the potential maybe that for a big resistance or one more push up to the 886 fib, something that remains to be seen. For the moment though, the weekly bullish candle here, as we can see, we have the balloon circle definitely engulfing the week before. So with that said, we clearly have a bullish signal. Therefore, if you look at the daily, for instance, or the 4-hour, any hook back here is looking like a pullback, in fact, for more upside. If we zoom in here to the 4-hour chart, we can put a fib, for instance, on this upside, and we can look for potential pullbacks to this level. Even the 1-hour chart, in fact, right here, something like this, and we can see that this is the exact fib that they're using, the 23.6, the 38.2 fib. If price were to move to the 50 or 618, that's where I would expect support levels for more upside. The other option, of course, is that some kind of triangle is being built here throughout the beginning of the week, and then the break of that triangle could see the continuation of this euro dollar from this level up to 139.70, 140 for the moment. Let's take a look at the pound dollar. Pound dollar was in this uptrend but had a resistance line indicated by the black trend line here that gave a very good resistance spot that was broken last week. And we had that break, went up right to the minus 618 target with a pause at the minus 272. However, one thing we have to note is that also price stopped at the top. The red line here, price stopped to the pip at that point. So is that basically double top potential with a reversal in mind, or is that just a stalling spot for more upside? That question remains to be seen. If we do break that red line, we have space up to 170, I would say. If we break this support line in this daily uptrend support line here and move down, then obviously then there's a potential for double top. Until we break that uptrend channel, I wouldn't count on the fact that it is double top. At the moment, I would just say it's a pausing spot for retracement here to gain some momentum back up. If we look at the hourly, we put a fib from swing high, swing low, just like on the euro dollar, priced up to 23.6 and the 38.2. Any of these fibs basically could be the turning spot, whether it's the 38.2 or the 61.8, that remains to be seen. At the moment, we are bouncing at the 38.2. What I would like to see is a triangle here, and a break of that triangle could be an interesting play, because then I would expect the continuation. This is the AUDUSD. We're taking a look at the Camarilla pivot point as well. We can see that the price is bouncing between the H3 and L3, indicating a tight zone here. If we break above that, I wouldn't be surprised, for instance, to see the upside continuation with a pause roughly at Friday's high in the H4 R1 pivot point confluence. And then if we do bounce and continue, there could be an interesting trade up to the H5 at around 94.55. So a break above these levels, above the contracting triangle, I think is a very interesting trade idea here, because if you look at the 4-hour chart, definitely an uptrend. So that would be with the trend continuation. All right. Now the 50-minute chart also shows some space to the downside potential. That would be a retracement, a bigger retracement on the higher time frames, but could happen, I guess, but it's more counter trend, definitely when looking at the higher time frames. So it'll be interesting to keep an eye on the R1 daily high of Friday, confluence here, and to see if we can actually break out, pull back, and continue on this AUDUSD. Dollar yen, certainly not interesting in my opinion because we broke out but then didn't go anywhere and already back at support level before you knew it. A big fall, so no good breakout right there, and price is back at support. But this is a very big consolidation zone and not interested in this currency because basically it's just a flat, right? So we'll need to see some directional guidance before anything could be said. If we do break the support line, maybe a move down to the 61.8, but highly likely that you get snapbacks as well along the way because of the very rangy environment here on the yen primarily. So thank you for your attention. Looking forward to see you at the webinars again. Wish you many pips and a very, very good trading and very great week. See y'all soon. Cheers.